What does a 17th century tulip bulb have in common with a 1999 website and the world's most advanced artificial intelligence? On the surface, nothing. But in economics, they are the stars of the same play, performed for centuries. It's the story of how human psychology collides with new technology to always produce the same result: a financial bubble. There is a 5-stage script that repeats with chilling precision. It turned gardeners into millionaires and tech geeks into billionaires before grinding their fortunes to dust. And today, that same script is unfolding again, right before our eyes. Let's decode this timeless script of human nature. Every tech bubble, regardless of the era, follows the same path. It all begins with what we'll call the displacement. Something new and revolutionary appears, a technology or an idea that promises to change the world and create a new generation of the wealthy. This is the spark. Then comes the boom. The smart money, seasoned investors, venture funds, seeing the genuine potential, begins to invest. Prices rise smoothly. The media starts reporting the first success stories, acting as a lure, fueling the interest of the general public. After that comes the euphoria. This phase is fueled by two of the most powerful human emotions: greed and the fear of missing out, FOMO. The crowd rushes in, and logic gives way to herd instinct. This is the moment the most dangerous phrase in investing is born. This time is different. Traditional valuation methods, profits, revenue, are dismissed as obsolete relics of a bygone era. The fourth stage is the peak. Prices reach absurd, irrational heights, completely detached from reality. This is the critical moment when the smart money, who bought in early, begins quietly selling their assets to the crowd, who are still buying in a frenzy. The greater fool theory is in full effect. I'll buy an asset at an insane price because I believe a greater fool will buy it from me for even more. And finally, the inevitable endgame: the crash. Suddenly, in a single moment, the supply of greater fools runs out. The last buyer has bought. Panic replaces euphoria. Everyone rushes for the same narrow exit at once, and the bubble bursts, wiping out the fortunes of those who came to the party last. In 17th century Holland, the displacement was a new exotic flower brought from the Ottoman Empire: the tulip. It became the ultimate status symbol. First, prices rose slowly. Then, the boom began. Stories of single bulbs being traded for Amsterdam townhouses ignited euphoria. The trades weren't on exchanges, but in taverns, over beer. People sold their land, their homes, their family heirlooms, not for the flowers themselves, but for promissory notes on bulbs that hadn't even been harvested yet. The entire nation was convinced that this time is different. At the peak of the mania, a single rare bulb of the Semper Augustus variety was worth as much as a large ship with its full crew. It was pure madness. And then, in February 1637, at a routine auction in the city of Haarlem, a high-priced bulb failed to sell. Word of the failed auction spread like wildfire. Panic set in. The crash was instant and brutal. Within weeks, tulip prices had fallen by 99%. Thousands, from aristocrats to maids, were ruined. The script had been written in blood and tears. Fast forward to the late 1990s. The displacement was the internet, a technology that truly was changing the world. The boom began. Any company that added .com to its name saw its stock soar after its IPO. Euphoria set in. Companies with no profits, no revenue, and sometimes not even a working product were valued in the billions. Their worth wasn't measured in money, but in new metrics like eyeballs or click-through rates. Wall Street analysts shouted, "This time is different. Old metrics are dead." At the peak in 2000, investors were piling into companies like Pets.com, which spent millions on Super Bowl ads but sold pet supplies at a loss, or Webvan, which promised 30-minute grocery delivery and burned through $1 billion before going bankrupt. People quit their jobs to become day traders, believing it was the new path to easy riches. And then the music stopped. In March 2000, the crash began. The Nasdaq index, the heart of the new economy, fell nearly 80% over 2 years. Most dot-coms vanished, taking trillions of investor dollars with them. The script was repeated, perfectly. Many believe that after the dot-com bust, people grew wiser. But the script played out again, very recently. The displacement this time was blockchain and cryptocurrency. The boom began with Bitcoin's rise. The euphoria arrived with thousands of new altcoins and ICOs, initial coin offerings. Anyone could write a few pages of text, call it a white paper, design a logo, and raise millions from a crowd gripped by greed. The same mantra was chanted. This is a new financial system. This time is different. The peak arrived in late 2017, and then again in 2021. People took out mortgages to buy cryptocurrencies they knew nothing about. And then came the crash. And another one. Billions were lost on projects that were either empty promises or outright scams. It was a perfect, time-lapsed rehearsal of the old play. And so here we are, in 2025. Today's displacement is generative AI, and it is, without a doubt, revolutionary, perhaps even more so than the internet. The boom is in full swing. Stocks of AI-related companies like Nvidia, which makes the essential chips, have gone parabolic. Billions in venture capital are pouring into hundreds of AI startups, many with no clear business model. The euphoria is arriving. We are hearing the exact same words, the same promises. AI is not the dot-coms. It will solve all of humanity's problems. This time, it really is different. Any company that merely mentions AI in its earnings report sees its stock jump. New metrics are already appearing. A company's worth is measured not by its profit, but by the number of parameters in its language model. So where are we in this cycle? Are we approaching stage 4? The moment when euphoria peaks and logic is completely abandoned? When the only reason to buy is because the price went up yesterday? History doesn't give exact dates, but it shows the script. The graveyard of history is filled with technologies that were supposed to change everything. The steam engine, radio, biotechnology. And many of them did. But that didn't stop investors from losing everything when the bubble that formed around them burst. Displacement. Boom, euphoria, peak, crash. The script is always the same. Only the technology and the names of the assets change. The actors remain the same, driven by the timeless emotions of greed and fear. Knowing this code doesn't mean you should deny the importance of AI. It means you must separate a revolutionary technology from the irrational euphoria it creates. History shows that after every crash, a few true giants, like Amazon and Google after the dot-com bubble, are left standing. But it also shows that hundreds of other companies, which seemed like geniuses at the peak of the euphoria, disappear forever. This 5-stage script is not a prophecy, it is a map of human psychology. Subscribe, and we'll learn to read it together so you don't get lost in the crowd.